I'll discuss about the 401k. I'll be mostly focusing on these 8 questions, and if you have any other questions, you can comment. I'll try to answer that. So, like starting from the very basic question, like what is 401k? The four so 401k is a retirement plan, like instrument, or you can say a government scheme where you can like it is used for you. Let's suppose you are employed right now, and you want to secure your future and have money for future. So 401k is the most useful tool for that. It's the best retirement tool. It helps you saving taxes. It's help you grow your retirement corpus. So I'll be discussing like why you need 401k, type of contributions, what is employers match, like free money, what is maturity age of your investment or your 401k account, how to withdraw them, what is the withdrawal procedure, what is like let's suppose you don't want to withdraw them in your retirement, rather you want to withdraw them before your retirement in case of emergency, or you want to buy some house or your car. And what if you are like came to us like on visa, or you are immigrant here and you want to go back out of US to your country, and then what will happen to that? Because now you'll be working or you'll be retired in your country, and your money will be with the US government in 401k, or US instrument 401k. So like I just explained like what is 401k. So mainly it's the main and the best retirement saving instrument or tool in US. It helps you save taxes. We'll be discussing in the type of contributions, how to save taxes on it and all. So like giving like very brief, that's what it is. Like why 401k? So it helps majorly for you is like save taxes. That's the most important part, I think. Second is build your old age or retirement corpus. And I think these are the two main things why you'll use 401k. Other reasons can be like if you are very like used to, like you are not very habitual for to save and all. So this money actually cuts out of your salary and it don't come to your bank account. So this can help you save money if you are not habitual of saving money. And yeah, so the other reason is like take free money from your employer. So I'll discuss that point in employers match. So majorly these should be the reasons. Let me know if you have other reasons to contribute to 401k. For me, majorly it is all about saving taxes and building like the retirement corpus. Yeah, so there are two major type of contributions you can do. One is traditional. One is traditional. It's also called pre-tax. And another one is Roth contributions. This is post-tax. So in pre-tax, what happens is, let's suppose your earning is 150k dollars, and you select to contribute 10k. So what will happen is 10k will be considered a deductible from your salary, and your taxable income will become 140k, and you will not pay any tax on this amount. No taxes on that. and now this amount will grow for you. And the like the amount will go for you, and you whenever you take the withdrawals, I'll explain what is the difference when you take withdrawals from your pre-tax contribution and post-tax contribution. Yeah, and one more point let me add here is how to grow your 401k, so that's also very important. For Roth IRA, let's suppose your salary is 150k, and let's suppose, so this is after tax contribution. So let's suppose you paid 30k taxes, and your salary is now 120, like whatever you getting at a home, it's 120k. Out of 120k, let's suppose you make contribution of 10k. So these are the two major ways you can contribute to 401k. Right now for 2032, the limit is 22,500. Right now, the limit for 2023 is 22,500. You cannot contribute more than that for the financial year from January to December. For the pre-tax contribution, so like giving again the brief on it, pre-tax contribution, you don't pay tax now, but whenever you are taking the withdrawal, you have to pay tax then. For the Roth contribution, post tax contribution, you pay tax now, like you paid the tax on the amount you are contributing, and then in the future when you withdraw, will be no taxes. I will discuss it uh, like further in the withdrawals. So another point comes up is like let's suppose I contributed now, like what are options I have now. I contributed 22,500k, 22,500, but like they will be just 22,500 after even 20 years, 30 years, or what will happen to that. So there are, so every employer or every platform, if let's suppose you use Fidelity or you use Stanley Morgan or anyone, they will give you like lot of options where you can invest your money, and you cannot like you cannot change uh, the old investment. You can always make change to where your the new money will go, but you cannot change where your old investment you cannot change the like investment tool or investment uh, like let's suppose index or bond for the contribution you already made. So be very sure like where you contribute your amount, because it will be for the long term for your retirement. So like major things you will always see is like indexes, like stock indexes. You will see like S&P 500, you will see almost everywhere. I'm pretty sure you will see it everywhere. Large cap stocks index. You will see bonds option if you want more security, and like less risk. You will see targeted funds. So what they do is they have, like let's suppose you are thinking to retire in 2050, so they have targeted fund called like targeted fund 2050. And considering that period, like let's suppose it's 27 years from now, they will invest like 80-90% in stocks, 10% in bonds. Let's suppose your targeted fund is 2030, then like it will be 50% stock and 50%, so they manage it. So you can consider that also if you don't want to apply any brain. Just think when what age you will be most probably retire, and then you can select the targeted fund. So these are the major ones, but you'll see lot of options there. So that's a good thing about it. So employer match, so I also call it like free money, and you should never lose this free money. So every company or every employer also matches the like also contributes for you. So let's suppose you contribute $22,500. There are different set of rules for different employers. Like for Microsoft, they contribute 50% of your contribution. So let's suppose if I contribute 2,500, they will contribute for me 11,250. Like for Amazon, they will contribute 6% of your base salary. So let's suppose your base salary is 150, then you can calculate 6% of it, and then like a little bit complex with them. For Microsoft, it's simply 50% of your contribution, but for Amazon, it's 6% of your base salary, and then contribution rules and all. So you have to um, you can actually search any company you want to work with or you work with, and see what contribution you will get on it. Maturity age. So one so you uh, once you so this as this is a retirement tool, or retirement investment tool, you cannot so it is expected from you is that you are investing it, or you are saving the money for your retirement, like old age. So the maturity age of it is 59.5. When you turn 59.5, your 401k will like mature, and you can take money out of your 401k without any penalties. Before that, if you take amount, there will be penalty. I'll discuss in premature withdrawals. But after 59.5, you can actually keep the money invested as you want, like as it's growing, or you can change the investment tools for it. But before that, there will be penalty, but after that, no penalty. For like for withdrawals, it's simple. Like for I just mentioned, like for 59 point, like if you turn 59 and a half, free to withdraw. If the contribution was pre-tax, then you have to pay tax on whatever you take out. If the contribution was post-tax, you don't need to pay any tax. So let's suppose in 2023 you made $5,000 pre-tax contribution, and you made $5,000 post-tax contribution. Now let's suppose this amount grow to $50,000, and this amount also grow to $50,000. Now because it is pre-tax and this is post-tax, so this amount was actually more, right? So let's suppose, just for hypothetical calculation, this was $6,000. You paid tax on it, and then you took out the amount, you invested the amount $5,000. So for you it's actually $6,000. Now both turn to the $50,000. Let's suppose you invested into the S&P 500. Now there will be tax on it. So considering, let's suppose you are in 20% tax bracket, so you will get $400,000 take home. Here there will be 40,000, sorry, and here will be no tax for you, because you already paid tax before. So it will be like 50,000 take home. It actually depends on what do you think, like the taxes. So a if the taxes today, you'll ask now, like, should I contribute pre-tax or post-tax more? It's all boils down to like which tax bracket you will be in the future. So right now, let's suppose you are in low tax bracket, and you think like the future taxes will be low and you will be in less tax bracket, so it makes sense to go ahead with uh, like pre-tax. But if you think like future governments will tax us more, or you will be earning, you will be doing some business, and there will be a lot of income with you, and you will be in the higher tax bracket, then post tax contribution makes more sense. And premature withdrawal, so let's suppose you want to withdraw money before 15 like 59 and half years of age. uh, so there will be 10% penalty on it. So let's suppose you want to take out, let's suppose your contribution is $100,000 in 401k right now, and you are not yet 59 and half age, and you want to take out $10,000. So you have to pay 10% penalty, and you will take only $9,000. So keep in mind, if you're uh, like taking out money before, then 10% penalty you have to make give on it. Moving out of US, so many of you may be like immigrant, or maybe you are working on visa in US. So if you are moving out of US, the good thing is you can keep your 401k contribution as it is. You Many people think like, I'll be moving out of US in few years, then I should not make contribution to 401k. But that's not I don't think that's a really good idea, because you save taxes on it. You can keep your money in 401k till your retirement age, or like whenever you want to retire. And anyways, if you are moving out of US, you have an option to pay 10% penalty and take the money. uh, if Let's consider a case where your employer is matching more than 10% of your contribution, then it sure short makes sense, if you have like surplus income, to go ahead with 401k, grow your money, take free money from your employer, and just let it grow, let it be there. And whenever you are moving out of US, or moving out of your, whenever you are getting retired and you want that money, just give the 10% penalty and move out. So this is mostly it for the 401k in this video. If you want to, like, this is a complex topic, I know. So if you want to know more questions on the 401k, have other questions on it, let me know. Just feel free to comment below the video. I'll try to answer all of the questions. And if you have like a major question on 401k or any other investment tool or tax saving tools, let me know. I'm happy to create a video on that one. So yeah, thank you.